Hello, everyone. I hope you are well on this Thursday. It is Thursday, it's 11 a.m., and that therefore means that it is time for what is happening now, our UK economy and small business update. So, thank you for joining me today. Now, there is a theme this week of what is being talked about, and that is all around the interest rate announcements, which will happen today. If you're watching live, they will happen today in about an hour's time. So we don't as yet know what they are going to be. It may, of course, get announced whilst I am actually live on this session, but it's typically at 12 o'clock that we hear what the interest rates will be. But that is what has been dominating the news over the last week. So thank you for joining me today for what's happening now. For those of you that are new to me, if you have not seen me before, if I've just popped up into your feed, welcome, and thank you for joining me today. My name is Annette Ferguson. I am CEO of Annette & Co, UK-based accounting firm. I'm a chartered accountant, certified Profit First professional, and small business growth strategist. And fundamentally, we help business owners take home more money from their business for them and their families to enjoy. And we do that through a mixture of accounting, profitability, and tax management strategies. So, welcome to what is happening now, and let's get diving in to what has been happening now. Of course, as always with this session, I have a heap of notes that I'm going to be referring to. So if I'm looking down and looking around, that is exactly what I'm doing. So first off, we have, of course, announced yesterday was the jump in UK inflation. This was actually unexpected that the UK inflation rate would jump, they announced for February period. And coupled with the turmoil of the global banking sector, Silicon Valley Bank, Credit Suisse, it leaves the Bank of England rate setters basically facing a tougher decision than usual today on interest rates. Like I mentioned briefly, interest rate decision is today. Economists and the Bank of England had forecast a decline from January's 9.9%, but the latest data shows that inflation is at 10.4% and has reinforced the fears that price rises are increasingly being driven by domestic pressures in the services sectors rather than the external shock of high energy prices. So because these pressures tend to be more persistent, the data has cemented market expectations that the Bank of England will indeed raise interest rates again today. Now, last week we spoke about there was a humming and hawing as to whether that would actually happen. But in the last fortnight, concerns over the health of the global banking sector have also intensified. And although there is no evidence so far that any UK-specific issues exist, the central banks maintain that financial stability will not get in the way of their inflationary fighting mandates. And the tensions in the financial markets are likely to make banks wary of lending. So all other things being equal, this would typically would reduce the need for an interest rate increase. So we've got these two things happening at the same time. The UK Chancellor Jeremy Hunt has said that the Bank of England should remain focused on taming and what he calls dangerously high inflation, despite the strain placed on the global banking sector by rising interest rates. So, like I mentioned, we will hear shortly what that rate is likely to be. That happens today, which is Thursday the 23rd, if you're watching it on the replay at midday. So we will be hearing about that shortly. There have also been proposals to revamp the UK bank capital rules, which include measures that are likely to hit lending to small businesses. So, part of a broader proposal by the Bank of England's Prudential Regulation Authority to introduce the final package of Basel rules in the UK risks cutting lending to SMEs by an estimated 25%. So, the small print of the package includes removing a favorable treatment of SME loans known as the SME supporting factor. And that was introduced across the EU in 2014. when, of course, the UK was still a member. And it was in favor of what regulators called a more risk-based approach. So Oxera, which are consultants, have estimated that the changes could result in a £44 billion drop in lending to small businesses. Of course, if that happens, we are going to see further demise in small business and less small businesses being actually able to start up. The Bank of England proposals also include an element that would make lending backed by property to small companies more expensive than an unsecured loan because of capital charges on property-backed loans being high. So this is not good news generally for the small business sector. Make it harder to get loans as a small business. It will make it harder for small businesses to start up that require funding. Not good overall for the UK economy, because we know that small business is fundamentally a massive backbone of the UK economy, employing a vast number of people and fundamentally giving a huge amount to HMRC by way of taxes as well. So not good news for UK small business there. And we're also hearing that crypto is going to be specifically added to self-assessment tax forms. Now, of course, crypto gains have always had to be declared in a personal tax computation, in a personal tax submission rather, but there's going to be a specific bit added to make it really clear. So the changes are proposed that it will make it harder for investors to overlook the reporting requirements of cryptocurrencies. The Treasury confirmed yesterday that from 2024-25, the self-assessment tax return forms will feature a standalone section for individuals and trusts which have disposed of crypto assets. So that's going to be the return. So 24-25 tax year is the return that would be due by January 26. So that's the timing on that. So at present, the sale of cryptocurrencies is reported alongside a range of other assets and reliefs in that part, but they're going to have a specific section for it. The proposals are forecast to raise about 30 million for the Exchequer between 2025 and 2028, owing to an anticipated increase in declared capital gains tax liabilities, according to the OBR, the Office for Budgetary Responsibility. The timing of the changes also, incidentally, coincides with a sizable cut in capital gains tax allowances, which will go from 3,000 for individuals to 1,500 and 1,500 for most trustees, by 24-25. So capital gains tax allowances are getting cut and cut over the next few years. And the final thing I want to mention today is that employers are being urged to boost UK staff pension pots. So the Living Wage Foundation has warned of a future pension crisis, basically affecting millions of people, and businesses are being encouraged to pay more into the employees' pension pots over and above what the legal requirements are. So the Living Wage Foundation is a charity that campaigns for fair pay and has launched a new living pension employer standard on Tuesday to move to increasing employer pension contributions from 3% of employees' wages up to 7% of employees' wages. Now, that is, for most small businesses, a massive jump in contribution. And in reality, I am going to guess, knowing what I know about small business, that while small business owners would love to be able to put this into practice, the vast, vast majority of small business owners are just not going to have the physical cash in their business to enable them to do this. And so this puts a further strain on small businesses as well, with things like pressure to increase wages generally, and of course the increase in the minimum wage coming in from April. This puts further pressure on small business, and that is not saying that these employees do not deserve an increase or anything like that. I'm not saying that at all, but I'm saying that there's even greater pressures then on small business, because the way that small business gets money for these things is to raise prices or to increase the number of sales that they make. And that is not necessarily the easiest thing for a small business to do. So there's a lot more pressure being put on small business as well. So not huge amounts happening overall this week. It has mainly been commentary around inflation, interest rate rises, and as I said, we wait to see in the next hour or just short of an hour as to what that comes out to be, and therefore what the impact will be. Of course, if you have borrowing that is on not on a fixed rate, you're going to be impacted if interest rates do increase today. So something to watch out for. Thank you everyone for tuning in today. This has been a slightly shorter session because, as I said, there's not been vast amounts of things happening, and I don't want to rabbit on for no reason at all. Remember that we are typically here Tuesdays and Thursdays at 11 a.m. Tuesdays for Training Tuesday and Thursdays for What's Happening Now, our UK economy and business update. However, next week I am not going to be around in the mornings. Therefore, I have moved the sessions for the 28th, Tuesday the 28th, and Thursday the 30th. And so those sessions will be at 2 p.m. each day. So change your diaries for next week. We are going to be 2 p.m. instead of 11 a.m. next week. So please do note that down, and I will see you then on Tuesday. Our topic for Training Tuesday next week, the 28th, is all around value-based pricing. So I will look forward to sharing that with you. It's a topic that is close to my heart. I am incredibly passionate about value-based pricing, so I can't wait to share that with you. And of course, we'll be back again on Thursday for our UK economy and business update. Like I mentioned, 2 p.m. next week for both of those sessions on Tuesday and Thursday. So don't turn up at 11. I won't be here. I won't be here till 2. So I will see you then. Have a wonderful, wonderful rest of your day, and I'll speak to you all soon. Take care, everyone.